Hey guys, how's everyone going? Just a quick market update. A few of you guys were messaging me, asking me my thoughts and if I could do a video. So here it is. Basically, we have had a nice breakout of this downtrend here that we've been in since we topped for the year, I should say, which was the 13th of July, right? So a couple of tests on this level and then a nice little breakout. Right, this could be called a bump and run reversal type play. So the target one would be 29,400 and then the previous highs, which is going to be around 31,450, right? So the main thing to watch here is we want to see price start to flag out for a little bit here and then push again to try and challenge the previous trading range, which was this one here, right? Acceptance back above pretty much 29K, which was also the 2021 yearly open, would be pretty big, right? And then that would open us up to, a push to 31K and then potentially range up here, right? Something like that. Okay. So that would basically be, we're below the previous range, you acceptance in the range, you then expect a rotation from the range low to the range high, right? So 31K, I think, is a decent target if we're not getting rejected right here at the moment. Now, as you can see on my chart, this red line here, this is the daily 200 moving average. And price last time we came up to it, rejected it, and also we're rejecting it off it again now. Price can't close above it. That's quite a decent size wick, about $500 plus that we had yesterday. Traded above it for a little bit and then rejected below. So somebody is defending the daily 200. What we don't want to see is this to get rejected from here and not be able to get back above it and then roll over, because then, you're going to have this head and shoulders type pattern set up with a really weak right shoulder, right? And then, people will be saying that this is just a rising wedge. And we're getting ready to break down. Now, if that type of pattern does end up setting up, I could definitely see a fake out to the downside, right? And this end up rolling over. What would usually happen with play like this, right? Chop around here, can't get over the 200. We end up breaking down, come back up, retest that trend line and this daily order block as well, and then roll over from there, right? That could be a nice short opportunity from this point here. If we do break down this little trend line, right, from this point here to this point here, if we do break that trend line, that could be a nice short, getting in on a pin bar or something like that, or a bearish engulfing type play, right? And one of the things I think we have to be watching out for here for the major setup that potentially could be in play, and potentially this is too higher time frame, because it's taken over a year and a half. But we have seen these really high time frame patterns play out recently. I mean, just look at the ES for example, and this one here, which was the broadening descending wedge, played out perfectly, and that just came up and pretty much almost hit its target too, right? So yeah, that was a pretty nice one on very, very large time scale. But this could end up coming back down. Don't forget this move in there is where you want to get short, right? If the trade setup does come, right? So let's just say this rolls over. I would like to see this low here and this low here get swept, and then a reclaim of the low closes, which would basically be 25K pretty much on the dot. So if we can reclaim 25K after losing it, maybe we drop down to I don't mind this order block here actually at 23,700 pretty much. If we come down, tag that 23,700 and then reclaim 25K, I think that would actually be fairly bullish. That could give us a little bit of an extra sell-off in October, and everybody that's super bullish right now gets trapped in that, and then they end up dumping below this range low here, and then that's when the whales really step in and then push the price back up. And then here in January or something like that, we get the BlackRock spot ETF approval, and everybody just got wrecked before that comes out, and then it takes off while everybody's sitting on the sidelines expecting it to keep dumping down to 20K or something. That I definitely could see something like that playing out. And obviously, if something like that does play out, it will have it will coincide a lot of what's going on in the stock market and economy and everything like that at the moment. So that would basically be the bearish view if we can't get over this 200 daily moving average. Usually when you flip the 200 daily, it's a pretty big, significant move. Like if we look here, okay, we broke through it quite aggressively and then retagged it here, right? Basically, since we dropped it for the first time in tiny little closes here, but really traded below it, December 21, right? It never got back above. And this is pretty much the same for the stock market. I'm just going to show you here on the NASDAQ as well. It's currently the weekly. Right, NASDAQ was the same. Okay. Once we dropped and got underneath the 200 daily moving average, right, it held as really significant resistance, right? So it is a level that a lot of high time frame traders will trade off, and there's probably, you know, hedge funds and different people shorting off that level. Anybody that's bearish will definitely be shorting off it, right? And then, you know, we finally break above it almost a year later, and those same trading bots and algorithms and traders are defending it to the upside, right? So it's something to think about. Definitely really important level, right? And it's not going to be good if we can't get above it and prices, you know, larger players are shorting off it, right? So probably something important to think about is also the bullish case. Now, the bullish case I've sort of outlined and been posting in the Facebook group and stuff like that. Right, this line hasn't changed. We came up and tagged the VWAP perfectly. So we're basically doing the rotation trade from previous quarter value area low, right, to previous quarter value area high, right? So it's pretty much on track at the moment. A little bit of a deeper throwback than first expected, but all's really happened is we've come back and hit the point of control from this high volume candle. So this blue candle here is a high volume up candle, and these dotted lines that come out of it is the point of control where the most amount of trading happened in that for the volume in that area. And so that's the point of control. And the market does like to come back and tag that and just fill in these larger volume candles. You'll see most of the time these larger candles that have displacement, or, you know, some people call them fair value gaps or imbalances. The market does like to come back and sort of fill in those imbalances before it continues on higher. And that is just a mechanism of how market making works. Okay. We don't need to go into how market making works exactly. You can research it yourself if you want to, but it's a fairly complicated process. But all you need to know is when there's big high volume candles with a lot of displacement, so they have a pretty big volume spread, I should say, on the candle, pretty big area of, you know, numbers that it opens at to closes at, to put in the most basic terms possible. When price moves in one candle, it likes to fill in that gap, right? So anyway, we need to get over the previous quarter point of control, or also known as the VWAP level, right? So when we can finally get above that level, I think that will give us, you know, the rest of the rotation play and finish off to close that trade out at the previous quarter value area high. So far, it's looking good, even though we did have this decent throwback. It is starting to curl around and push back up. And, you know, realistically, this needs to flag out here and do something like this and maybe form like an ascending triangle or something like that. And, you know, that would make a lot of sense, right? If we look at this, basically, all we've done is, you know, so we had a whole heap of daily bullish divergences back here, right? If you get up your RSI indicator or anything like that, there was some really big daily divergences down here. And usually after you get big daily divergence and being super oversold, it runs for a little while. It doesn't just have like a small run and then roll over again. That's why I love to trade those types of setups. And you only get a couple of those per year as well, right? So you have to make sure that you nail them when you get them and make them count, because they're rare. Right. Basically, we ran up, and the market structure has completely shifted since we put in this low here. Like the way that market is trading and moving has changed completely. So it's something to take note of for sure. We had this falling wedge, which is the first time we've had a bullish structure actually play out to the upside, which was quite interesting because, you know, we had this instant pump and then instant dump back. And, you know, a lot of people were just expecting it to roll over from there. And okay, we've rejected, but then, you know, it managed to find its legs and push up anyway and reclaim the previous quarter value area low, right? So it's a good sign. that we are having that bullish price action. And you know what? We're also on the 4-hour, we're currently in an uptrend. So this is the low, right? This is a higher low with a higher high, and we just made another higher high, right? So if this ends up being, you know, the next low, and it comes down trades like this, and you know, we're putting some sort of a bull flag here, ascending triangle would be really nice. Then yeah, it's just another higher low, and we're continuing that 4-hour uptrend anyway, right? On the higher time frame, you know, potentially this is just, you know, another range through here, and we're just ranging sideways before the market decides what to do next. Okay. So it's something to think about. That is for sure. I mean, I'm always generally leaning towards being bullish, because it's like, why the hell wouldn't you be buying Bitcoin right now? When you know you have potential for the spot ETF to be approved at any time over the next couple of months, and you know that is going to add significant amount of demand into the market, and then at the same time we're only a couple of months off the halving, which is going to significantly cut the supply. So any major drops of sell-offs, you know, below this 25K level, I think are going to get brought up pretty quickly, right? So that's sort of my stance on it at the moment. I'd love to see this play out to the upside, but you know, truth be told, the market is so choppy and just going sideways a lot right now. It's really hard to pick if this is going to continue to the upside. I managed to get into a trade back around this area here, about 26 something, 27K. So just going to hold that. I managed to also buy some spot back here as well on the falling wedge level. So yeah, can't really complain too much. Hopefully the bags continue to pump and I can take profit on the leverage trade around this 29,600 level is the plan for that. On the higher time frames on the stock market, I think probably the most important chart to watch this week is going to be the NASDAQ weekly, right? We want this to end up playing out as a Morningstar reversal. Really nice weekly close last week with a dip below here. And then on the lower time frames, on the daily, we also had the daily TD9 setup, which I'll show you right now. But yeah, this is like the kind of like the high time frame setups I love for reversals. And, you know, we've just had 1, 2, 3, 4, now coming into 5 days of strength straight out of that TD9, which was on Wednesday last week, right? So yeah, this was perfect really, because, you know, you have the TD9 level from back here, which is these green dots, right? This is always going to be an important level. If we go over and look on the other futures markets as well, because this is just on Oanda, there was actually a gap through here from contract rollover. You can actually see it here on the ES chart, because this is a CME chart as well. So on the NASDAQ CME chart, you sort of had a gap through here as well, which the market has now come back and filled. We can see that the ES, the SP 500, is a lot weaker actually than the stock market. And it's also sitting on a high time frame trend support at the moment. So we don't really want to see ES losing that trend support. That is for sure. One thing that's a little bit scary at the moment, though, possibly is bottoming out today, is the gold price. That has absolutely been annihilated after it sort of faked a breakout here of, you know, it's kind of an ugly looking falling wedge, to be honest. But, you know, fake the breakout of that, you know, rejection pin bar, shooting star reversal set up there, and it just dumped pretty much. How many days in a row is that? 13, 14 days in a row, just been going straight down, right? And that is because the DXY is pushing really aggressively, but you know, who knows how this is going to end up closing, but potentially this ends up closing as a pin bar and we get a relief rally out of that. RSI is very, very low on the daily for gold. I mean, I can't remember the last time I saw it that low. You have to go back, you know, potentially 5 years ago, right? Which was the bottom of you know, before this massive rally that we had and major breakout of the gold price, right? Was the last time we were sort of this low on gold. So yeah, interesting to see that happening. And the reason why that is happening is because the dollar has been on an absolute tear after this fake out. So you can see this is a really good example of range trading here with fake out below the range low here. So, you know, dollar bears get trapped here. Then, you know, it tries to break down on this candle here, right? and it rejects the breakdown, right? And ends up closing very strong. And from there, it's just been straight up pretty much, right? And that has been going on for a couple of months now. I think it was the 16th of July. Yeah, the 14th of July, we put in the low. So it's 81 days pretty much been straight up for the dollar. And that's why things like gold are having a really hard time. And even Bitcoin, for example, right? Your pair, it's the way you price Bitcoin is against the dollar. So when it's pumping, it makes it really difficult for Bitcoin to go up. But Bitcoin has somehow managed to move up in spite of this anyway. So eventually the dollar is going to top out, right? And have a roll back over, and potentially it comes all the way back down to $100, right? But let's see anyway, because we just need to keep our eye on it that doesn't continue pumping really aggressively, and get back up to the previous highs, around $1.13, $1.12 or something like that, because there's a few gaps in here that maybe one of the reasons it's pumping aggressively is because some traders might want to fill this imbalance candle back here. It's probably a bit of a target anyway. So yeah, that is probably adding to it for sure. But there's macroeconomic factors at play, which is why that is playing out. And yields have been on a massive run as well, right? Like look at the 10-year yield. It's almost been straight up since May. Okay. So something to think about anyway. Yields going higher. The 2-year hasn't really moved at all, right? Which is probably a good sign to see. The 10-year actually starting to catch up to the 2-year. They're starting to get a little bit closer now, to be honest. In that inversion is probably coming down a little bit. And the 5-year's been pushing pretty aggressively as well. So those longer term bonds, we want to see those get back above the 2-year, because you should get a higher percentage for putting your money away for a longer period of time, right? That gives us a signal that the market is moving back into some sort of balance and health. The one thing though is usually you get a recession once that inversion flips back to being normalized, right? So, but it is a big event, and everybody will talk about the yield curve becoming uninverted and how it usually leads to a massive collapse and recession and blah blah blah. Let's see if it happens this time, because we did get so much stimulus before that happened, right? Before during COVID, before we had this bear market, I should say, we had so much stimulus put into market, and that's kept unemployment pretty much at the lows. Unemployment is still fairly low at the moment. They were expecting it to push back into the mid-4s range, but let's see how that ends up playing. I should say they were looking for unemployment. The Federal Reserve were looking for unemployment to push into the mid-4s by next year, early next year. And we're not up at those levels just yet, but we do have new unemployment data coming out for September soon. So we'll have to keep our eyes on that. One thing I'm sort of watching at the moment is I like to keep my eyes on the Bitcoin mining stocks as well, because they can be a little bit of a telltale of what's happening. And the yesterday's daily candle for Riot Platforms, which is one of the biggest ones, is pretty nasty, to be honest. And that was obviously because BTC rolled over again. But let's see how these guys end up going. I think there's a lot of upside for this, and fairly big pullback, to be honest, after Bitcoin's nice run at the start of the year. So yeah, let's see how that ends up playing out. One to keep our eyes on for sure anyway. But I think the main chart to watch for is the NASDAQ, right? Really nice reversal here. This needs to continue on. I want to see it push up to, 1550, or, at least to keep this, falling wedge type setup in play. But yeah, the weekly on the NASDAQ, I think is going to tell the tale on if we're flipping back to being bullish or not, and it will drag everything else up with it, right? So it's a little bit just on the macro situation at the moment, and a few charts to keep our eyes on. Obviously the DXY, and then the 2, the 5, and the 10-year yields, right? Mainly the two that are running really aggressively are the 5 and the 10-year. So it's mainly the 10-year I think we need to keep our eye on, just to make sure that this doesn't, get a little bit too crazy and start pushing to go above 5% or something, because it's been quite the push, right? And yields haven't been this high for a long, long time. We have to go all the way back until 2007 to get up around this 4.68 area on the 10-year, right? So it is definitely concerning. The higher yields go and the longer that they stay higher, so higher for longer, that leads to more of a possibility of a major break in some part of the system, right? The higher yields go, the more stress gets put on the system, but we still haven't seen any major cracks yet that they can't fix easily. We did see major cracks at the start of the year, and that would have ended up being a really bad catastrophe with, you know, those banks going under. It could have ended up like a 2008 type scenario, but the Federal Reserve did solve that problem very quickly by printing money and bailing everybody out. So they bailed customers out. They didn't bail out the actual companies and the banks. So yeah, that is what I'm seeing at the moment in the market, guys. Hopefully that helps give you a little bit of understanding. You know, if Bitcoin can move up and get up to, you know, this 31K area, I don't want to, I'd rather see it just push up here and then eventually, you know, chop sideways in between 29 and 31K and then break out from there towards the end of the year, rather than, you know, just showing a lot more weakness and then rolling over through here. That would be a really nice setup, though, if we got something like that. That would probably be my most preferred setup. But yeah, I'm just not sure if that's going to play out. I mean, I'm generally a bull, right? I'd rather see this pop up here and just do something like this and then go eventually from there, you know, maybe even put in some structure like this, but actually plays out this next time. But yeah, let's see what we end up getting, and just play the setups when they come. But at the moment, the main setup is the bump and run reversal play that we're in right now, and expecting that to try and push up to the value area high, the PQ value area high at 30K. That is the main trade that I'm on at the moment. Right. So then altcoins, there's a lot to check out in this space. I might have to do another video, to be honest, on altcoins, but just a little highlight. There are a few that are right at range lows. So, you know, if you love things like Doge, it's not the worst time to be potentially looking at that. A lot of them look like they're trying to make a push from range low up to range high at the moment. Solana has been moving really nicely. You know, a lot of us got that inverse head and shoulders play. You know, if you're in Discord with us, and that looks like it wants to run at least 26. That's why I'm going to be taking profit. Got in basically at the neckline a little bit late, but I wanted to make sure that, you know, everything was actually going to move before I started longing alts on leverage. Did have some spot buys in here as well, but, you know, if that went low, I could just hold it anyway, right? But with leverage, you're going to get stopped out. So a little bit more risk. So yeah, I'm going to be taking profit of those about 26. So hopefully we do get up there to tag my TP, but I will be raising stop loss along the way to lock in profit. Right, AVAX, nice little breakout here. Basically want to see this chop sideways in a little bit of a bull flag and then push again. I do want to see this come up to at least 92 here. I want to see it break this downtrend that it's been in now since last year, but over a year and a half now. I don't want to see another lower low and then, you know, it does something like this and then you get another lower low and then eventually it breaks down. You just had one massive descending triangle. That would be pretty gross, to be honest. So I want to see it break that pattern. And then I probably will be looking to add. I would love to see it come up to 105, 116 and start to, you know, put in a little bit more of a wider range here, or, you know, something like this, start to range again a little bit higher, kind of like what Solana did, you know, how it sort of like had like this range down here and then it sort of like started to put in a little bit of a range higher up, right? So sort of just a little bit of a repricing. I think, you know, pretty strong project, one of the best DeFi platforms out there, that's for sure. And they've been around for a long, long time. So they've got a lot of track records. So I would like to see, you know, them to be a crypto company that doesn't disappear. And we actually have, you know, some companies that have lasted a little bit longer than it just being all new altcoins in the next cycle, right? I'm hoping that Link can be one of those as well. Pretty happy with this push on Link. This is just really beautiful price action, to be honest, for a range. Sweeping the range low here, right? Making it back up to range high, coming back down, tagging, and that's your test, right? And so got some entries in here, also got some entries back here, still holding both. I would like to see, you know, this to flag out here and then push up, right? and then we end up doing something like that. I don't like to see in a trading range like this that has already gone on since May 2022. I don't want to see this go on for, 1,000 days or something like that. Like, can we just get a breakout and start to get some decent price action on this thing, leading into the halving at least or something? Like, I don't want to have to see, all these major altcoins and not move until the end of 2024, but I'm definitely prepared for that to happen. So yeah. Anyway, that's pretty much it for today, guys. Thanks a lot for tuning in. We'll see you all in the next episode.